Comments by Queensland Premier Annastacia Palaszczuk on limiting rental increases has been praised by some economists, but in this week's Property Insider chat, we're going to explain to you it shows they've got no idea how our housing markets operate. We're also going to talk about the latest New South Wales election results and the RBA's comments about pausing interest rates. If you want to keep up to date with all that's happening in our property markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. The rental crisis in Australia has been an ongoing issue for some time now, with tenants struggling to find affordable and suitable accommodation. As a result, there's been some calls to cap rental increases as a solution to this problem. And while comments by Queensland Premier Annastacia Palaszczuk on limiting rent increases has been praised by some economists, I believe they show no understanding of how our housing markets operate. Now, I'm not downplaying the terrible rental crisis Australia is experiencing, nor the financial hardship many tenants are experiencing with skyrocketing rents around Australia. But industry insiders know that capping rental increases will only worsen the rental crisis. Then over the weekend, the New South Wales election brought in a new Labor government. And while there are many reasons why this has occurred, you'll hear Dr. Andrew Wilson suggest that it's the outgoing party's land tax proposals that are one of the factors that have affected its downfall. So I look forward to having a chat with Dr. Wilson, Australia's leading housing economist and chief economist of my housing market, in this week's Property Insider chat. Hi, Andrew.
Yes, good day, Michael. It's been an interesting weekend, certainly interesting on the political front. In fact, it's been an interesting week on the political front. I think we had a bit of a thought bubble there from the Queensland Premier in response to Australia's rental crisis. Of course, we've had other, perhaps smaller political groups railing about high rents and suggesting that the answer is a rent control. But of course, if we had rent control, it takes the entrepreneurial focus away from Australia's private sector rental market and would probably only be a disincentive for those to secure rental properties as investments. And that would only mean fewer rental properties, and that would only exacerbate the issues. I think it's a can of worms. It's a simplistic suggestion, and it really doesn't take account of the market forces that are so important to keeping stable property markets. And it's the interference that we've had from policymakers, particularly the interference, I believe, from APRA 5 or 6 years ago, that created an investor credit squeeze, which really only eased last year, Michael. And that, I believe, is one of the factors that has allowed us or enabled rental markets to basically run out of property and push rents through the roof.
Well, as you say, the supply of rental properties has dried up. And one factor is that investors are selling up for a number of reasons. They seem to have been targeted by government and regulators. They pay slightly higher interest rates. There was a serviceability buffer. As you said, APRA has had a go at them. And various state governments have put in more market controls and interventions in favour of tenants. And recently, statistics show that between 25 and 30% of all properties currently listed for sale were rental properties before. So that's drying up the market as investors are getting out. Others are going for Airbnb and short stay accommodation. This really means that putting an extra impost on landlords, not allowing them to get market rents when for a number of years they've actually fallen quite behind inflationary pressures and costs of running the small business of property investment, that just means more are going to jump out and the supply-demand ratio is going to be even less in favour of tenants.
Well, I believe in a high inflation environment, high interest rate environment, Michael, there's still a reasonable appetite to secure a rental property. It's a very strong culture in Australia. We have a very high proportion of private sector rentals as part of our housing markets. Let's acknowledge that renters vote and so do landlords. And I think if landlords felt at the big end of town that governments were squeezing their profits and making life harder for them, I'm sure they'd be looking for political parties that had a bit more of a traditional approach to housing market activity. Beware the unintended consequences. We've seen that through the APRA process of manipulating or trying to manipulate housing markets, particularly Australia's housing markets. And the New South Wales government bit the dust on the weekend, and it went to the election with a highly questionable policy to get rid of stamp duty and in its place put a land tax impost. And they were going all round and about in a way to try to introduce this. But at the end of the day, as the Labor Party said, it was the never, never tax. And I think that cost them votes. And just as, of course, if we look back to the national election in 2019, when we had the negative gearing proposition to change that from the then opposition Labor Party. And I think that was a significant factor in, or certainly one of the factors that cost them a chance at government. They were supposed to win, if you remember, back in 2019, and they didn't. And of course, since then, they've quietly but certainly significantly said that they won't fiddle with negative gearing again. So beware meddling with Australia's property taxes. Have a look at those outcomes from the 2019 general election and the New South Wales election at the weekend. I was just bemused when this policy was introduced. The Queensland and Victorian governments have said they didn't want a bar of transferring, of changing stamp duty to land tax. I think they're a little bit more wisdom there in their policy making, and New South Wales, no, and they've paid the price. And I guess, as usual, we got the I thought it was amusing, all the supporters, particularly the usual suspects from in terms of economists, who are all saying, yeah, this was a great idea, let's bring in a land tax. But of course, they were the same ones that were saying, yeah, this is a great idea, let's get rid of negative gearing. You know, it's just, again, in a sense, the anti-property bias that's in particularly sections of the economic commentariat. And I think, guys, you just should, and girls, you should just try to focus on why macro policy is failing at the moment and has failed for the best part of a decade, rather than take on those anti-property views, which obviously the electorate does not support.
Well, clearly they don't. And governments for the last years have been seeing property investors as a sort of ATM machine. Hey, we got to raise some more taxes. How can we get it out of the greedy, ugly property investors? The other thing that's been in the news, it's not staying out of the news, of course, is interest rates. Yeah. The latest minutes of the Reserve Bank board meeting were recently released, and the media was quick in reporting that the board's almost certainly going to pause interest rate hikes in April. What are your views on that, Andrew?
I don't think there's a hope that they'll pause. If they do pause, they've got to answer the question, well, why are you pausing? Because there is absolutely no sign that interest rates have impacted the main game. Inflation is still high. We're starting to concerningly see that inflation is moving into the services sector. That, of course, reflects a booming economy with a shortage of labour and the capacity of employees to be able to bid up their wages, and the fact that employers have to pay because they're finding it hard to replace workers or find workers, and having to pay higher wages means that constrains their profits, which means they are obviously motivated to put up their prices. And that's called a wages prices spiral, and that's what we're seeing emerge now. So interest rates haven't done anything so far. The only easing we've had in inflation, Michael, has really been what we probably would have seen without interest rate increases, and that's the easing of those supply blockages that we had as a result of COVID. We got all that demand created through COVID, through stimulus packages. We didn't have the supply to meet it. As a result, prices went up, particularly, well, goods prices went up, because that's what we're talking about here. The big picture was skyrocketing oil prices, higher petrol prices, which always fuels inflation. But that's now eased as the petroleum producers have now got the capacity to meet demand. And we've just seen US oil at now under $70 US per barrel, which is around about half of where it was at its peak last year. So that's worked, and I'm not sure interest rates had anything to do with that. It's not about lower demand, it's about increased supply. And we're also seeing other consumer goods, furniture and even food prices have started to stabilise. And that's a factor that I think would have happened irrespective of what interest rates have done. So if the Reserve Bank, getting back to your original proposition, decided to pause rates over April, I'd be very interested to see what their reasons were, particularly given that since they made that statement, which of course is pushing on to a month ago in their March meeting, we've seen a big rebound in our labour market. We had an easing in labour activity, slight easing over January, Michael. We've discussed this, of course. And that maybe was the first sign that, okay, higher rates are maybe working. But no, not so much with the February data that came out last week. And that showed the week before last, and that showed a very strong result, back down to 3.5%, record low unemployment rate. We had 60,000 plus jobs created over the month. We had a fall in the number of unemployed, and we had a rise in the participation rate. So more people were actually coming into the workforce. We were creating more jobs and had fewer unemployed. Does it get any better than that? No. So I'm not sure how you could justify pausing interest rate increases in an economy that is at its strongest perhaps ever, will only generate higher prices. Demand is still strong. And why would you pause it? And I mean, as I said, they might have had the same result for inflation as we have today without having increased interest rates. The point is that if their target is still to get between 2 and 3%, I think there's a lot more heavy lifting to be done. If that's their policy position, if that's the dusty old textbook they're reading from, then they have to continue to push up rates to achieve that goal, that 2 to 3% target, Michael.
Well, they're going to wait for the latest inflation data for the March quarter, and that's not going to come out until after their next meeting in the first week of April. I just wanted to interrupt this week's Property Insider Chat to remind you that this is not specific property advice because we don't know your personal circumstances. But if, like many property investors, you're wondering what's the right thing to do at present, should you buy, should you sell, should you wait, you can trust the team at Metropole to provide you with direction, guidance, and wealth-producing results. Whether you're a beginner or an experienced investor, at times like we're currently experiencing, you need an advisor who takes a holistic approach to your wealth creation, and that's exactly what you get from the multi-award-winning team at Metropole. We help our clients safely grow, protect, and pass on their wealth to future generations through a range of services: strategic property advice, buyer's agency, wealth advisory, property management, renovations, and development management services. Go to metropole.com.au and explore your options with a complimentary clarity consultation. Getting to the property markets, we just recently reported the My Housing Market mid-month figures for the month of March, and they were looking pretty good. And we're going to get together just before the end of the month to report your latest figures for the month of March as well. But one of the signs of how that's going to end up is what's happening to our auction markets. And they finished the month of March pretty good, didn't they, despite higher numbers of properties being put to auction. And that'll again be tested this coming weekend with a pre-Easter Super Saturday.
Yes, Michael, it was another interesting weekend in our weekend auction markets. And of course, we know, as we continuously have said on this show, that weekend auction results are a clear forward indicator of what's happening generally in our housing markets. We've seen that this year. Melbourne and Sydney particularly have picked up quite strongly. In fact, it's probably the strongest, rebound between December of the previous year and the February-March results of the following year. Because we remember that auction clearance rates were just around 60% to end the year in Sydney and Melbourne. And now they've been almost consistently above 70% to begin the year. And that's in an environment of higher interest rates, Michael. So again, it gets back to the fact that higher interest rates just don't seem to be working at all. And I'm not sure how the Reserve Bank can, as it likes to mention what's happening in the housing market, it still tells us that house prices are falling. Well, they were falling not in Sydney and over February, as we know. And we've got the results coming up in a couple of days for March. And that's going to show, My Housing Market will show again higher prices in Sydney and maybe higher prices in Melbourne for the first time in a while. So, but the weekend auction markets, we had Sydney around about the same numbers of auctions of the weekend before, Michael. Clearance rate was down just under 70%, but let's remember it was a general election weekend. And of course, that does act as some sort of a distraction. We can use that as an excuse anyway for a lower clearance rate, general election. Melbourne, just under 1,000 auctions, higher than the weekend before. But look at that clearance rate, Michael, 74.5% clearance rate. Do you know that's the highest clearance rate that Melbourne has recorded, weekend clearance rate, in over a year? We have to go way back to February to get a higher weekend clearance rate for Melbourne. So that was a very, very strong result and certainly well ahead of the previous Saturday. Now, this weekend, we have Super Saturday. Just going through the other results there before I mention that. Brisbane, more auctions, higher clearance rate in Brisbane. Adelaide, a very strong result with, again, a surge in auctions, and Canberra higher again than the previous weekend with fewer auctions. But I think the big numbers there were certainly Melbourne, which really came out of the pack in terms of its cycle over the past year and produced over a year high result. And no surprise that we're now tracking higher prices in Melbourne with those clearance rates in the mid-70s. Now, next weekend, Michael, as you alluded to, is Super Saturday, which is the real Super Saturday of the year because it is the pre-Easter weekend of auctions. Of course, agents like to, front-end load all their activity so it doesn't clash with the Easter holiday period. Typically, the pre-Easter Saturday is the biggest weekend for auction numbers for the year, Michael. So we'll see how that pans out, but it certainly will be a big number of auctions. Won't be as many as we had a year ago because we know there was a lot of pent-up demand still being and supply being released a year ago following the lockdowns, constraints. But next week will be the acid test, particularly for Melbourne, when we're likely to see 1,200, 1,300 auctions, maybe more in Melbourne, and certainly pushing up towards about 800, 900 auctions in Sydney. So how will we go? It will be April Fool's Day, Michael, for the pre-Easter Super Saturday. Not sure there's any significance there, but it's a big weekend coming up and a big test for markets, and particularly those Melbourne and Sydney markets, which have clearly shown some energy over this year so far. And if we look at if we review the monthly results, the Sydney auction market is now a little lower over the month compared to February, but continuing to track over 70% for the month. Melbourne over 70%, again, its highest monthly result since April last year. And other markets have also improved or remained steady over March compared to February. So plenty of positives there in our property markets, Michael. I see some analysts who are struggling, the doomsayers who have foretold weaker activity in our housing markets are starting to blame it on low supply. I don't know how that works because most buyers are sellers and sellers are buyers. So it's almost irrelevant, the supply environment. And it shows that a lot of commentators don't understand the housing market. It is not a simplistic environment such as retail, because if it was when we had record numbers of supply a year ago, surely we would have had lower prices, Michael, instead of higher prices. But we had higher prices because, as I said, most buyers are sellers and sellers are buyers. And there are other factors that generate the changes in stock in terms of what happens with clearance rates. But, maybe one day they'll learn. But at the end of the day, this is a very solid market. And numbers are actually around about what we would expect after a consolidation, after a boom, after a consolidation and higher interest rates. I think that activity numbers are around about what we would expect, Michael.
Well, Andrew, we'll get together before our regular weekly chat at the end of this week, at the end of the month, so that you can be the first to release the housing data for around Australia. See you then.
See you then.